So after we got the world's largest IT outage ever thanks to CrowdStrike, ticker symbol CRWD, it begs the question, is CrowdStrike stock a buy right now? As you guys can imagine, CrowdStrike stock collapsed yesterday, so a lot of people are buying the dip, some people are waiting. So I want to break down my thoughts, what I'm doing. Am I buying CrowdStrike? Am I waiting? Am I in it? Am I selling? Right? So we're going to break down everything in this video. Hit the like button, make sure to subscribe, and if you guys want some free money, hey, who doesn't like free money? Check out that Moomoo link down below. Once you open up your account and fund it with at least $100, you get up to 15 stocks and your uninvested cash for a limited time. This is nuts. We'll earn 8.1% APY. So guys, use that link down below or go to stocksurfest.com/Moomoo. Get your money. And with that being said, cheers. Let's get right into it. So like I said, we had the biggest IT outage worldwide in history yesterday thanks to CrowdStrike and their little update, which we'll break down right now. That caused Windows to pretty much see the blue screens of death or whatever it's called. I'm not a big IT guy or a big tech guy, so I might screw some things up in this video, guys. But essentially, CrowdStrike screwed things up royally, right? And people are speculating, is this a cyber attack, right? Are they just saying it was an internal issue, which I don't think necessarily it was a cyber attack from outside sources. It might be, who knows? I just think CrowdStrike screwed up. I just think that's the reality of the matter right now. And look, this stock has been on a tear, right? Absolute freaking tear. You guys remember this stock was at $175 about a year ago, less than a year ago, and it got up to almost $400 a couple days ago. And the big rally that we saw really that started in the beginning of June was thanks to the S&P 500 inclusion. You guys probably remember, I think GoDaddy got included. CrowdStrike was in the recent quarterly rebalance for the S&P. It got included, so that made the stock go up even more from around $300 all the way to $400, pretty much because of the S&P 500 inclusion. And now we've given back all the gains. We're pretty much right back to where we were before the S&P 500 inclusion. And I think it got down to what, 270? Holy smokes. And the pre-market, guys, CrowdStrike yesterday in the pre-market, it got down to 270. So it was down at 1.20% because of the screw up, right? Which caused businesses from, airports to, healthcare to you name it, right? All across different sectors. It caused businesses to lose millions upon millions of dollars of business, and it screwed up a lot of operations, right? You guys saw, the airports, people were freaking out. They were missing their flights. They couldn't get, onto the flight. They were all waiting in lines. You guys probably saw those videos, and I was just traveling literally like 3-4 days prior to this happening. So this easily could have happened when I was at the airport. That would have sucked royally. It would have sucked very bad. But this begs the question now, what's going to happen moving forward? Are companies going to sue CrowdStrike? Are they going to want to maybe get their product for free for a little bit because of the screw up? Is insurance going to cover what happened with CrowdStrike? There's so many things that are up in the air right now because from my understanding, they do have cybersecurity insurance, right? So this is, it's up in the air. And for me, I think it's too early to go and jump the gun right now and just start buying CrowdStrike like crazy, because I think we're going to need a couple days, maybe a couple of weeks to see how this unfolds and the aftermath of the situation. Sure, you might get lucky. You might buy the stock now and it rebounds like crazy on Monday, Tuesday, Wednesday. I don't think that's going to be the case. In fact, I feel like as the aftermath plays out, there could be more downside or at least more volatility, maybe consolidation where we're at now. I don't know. But for me, guys, I'm not in CrowdStrike, full disclosure, and I'm not planning on buying it, jumping the gun on it quite yet, because honestly, even with this drop, I feel like CrowdStrike is still fairly overvalued. You heard that right. Fairly overvalued. Let me actually pull up some numbers here, guys. And by the way, run the likes up. I challenge you. Let's get this video to at least 100 likes. I appreciate you all for tuning in. And don't forget to subscribe. I think, 50% of you guys watch the content, but you're not subscribed. So hit that button. I appreciate you all as always. So take a look at some of these numbers, right? CrowdStrike is a $74 billion company right now, right? Okay. EPS trailing 12 months, 55 cents, which puts their PE ratio at a disgusting 555, guys. That is unbelievable, especially considering the S&P 500's PE ratio is what, a 25 or something like that? I forget exactly where it's at these days, but typically it trades between 20, 25 in that ballpark. So CrowdStrike is a 554. That is just insane, right? Unbelievable. And their forward PE ratio is still pretty high. Obviously not that high. Let me pull up the statistics tab very quickly here, guys. We can see the forward PE ratio is a 76, which is still arguably high, but they are growing. They are growing revenues a lot. You got to give them that. But for me, guys, that's still very high. The price of sales is a 23, price to books a 30, enterprise value revenue is a 21, PG ratio, the PEG ratio is a 1.3. I mean, guys, just based on the PE ratio alone, this company is very, very lofty valuation-wise. And that doesn't mean necessarily that it can't go up even more. In fact, it might go up to $400 again. Who knows, right? Like I said, people might buy the dip up, but I feel like it's wise to wait it out a little bit to see kind of how the aftermath here plays out after the biggest IT outage we've ever seen. You know, it's gonna take some time to play out, in my opinion, for us to learn more and kind of the repercussions that CrowdStrike's going to face, right? And let me see their revenue growth over time. It looks like here they did $875 million of revenue in 2021. It looks like, and now trailing 12 months, $3.3 billion. So they're growing rapidly. There's no doubt about it. I mean, they're pretty much tripling up their revenue over the last couple of years. Very good, but I don't think that's enough to sport the valuation that we're seeing. And when you're investing, guys, when you're buying individual stocks, the idea is not to buy them at any old price, right? You have to buy them at a reasonable price with a margin of safety built in. So I don't know. Does that mean $200 for CrowdStrike, $150? You know, if it got down to $150, $200, I would be a buyer most likely, but not here at $300. I think the risk reward is still fairly unfavorable here. And I just think, again, with individual stocks, it's not just me. The best investors ever, the super investors out there, Warren Buffett himself says this, right? Price is what you pay. Value is what you get, and you want to get it at the best price possible with a margin of safety built in just in case you're wrong, and I just don't think CrowdStrike is there quite yet. It's still up 20% year to date. We're up like 275% on a 5-year basis, right? I think we're going to have to come down a little bit more, and you can see here on the charts, it's holding 280 pretty nicely right now, but if it does collapse through that point, that's where we could start to get the entry point, or at least for me, somebody that's not in CrowdStrike, I'd consider it more if it goes under 280 towards 250 and under 250. But for now, I'm sitting on my hands, I'm on the sidelines, and I'm waiting to see the aftermath here. So what do you guys think? Are you in agreement with me? Let me know in the comments. I'm curious to where your head's at. Smash the like button. Don't forget to subscribe, guys. And feel free to check out my Patreon for my private portfolio, Discord chat. All of that is linked down below. And don't forget to also get up to 15 stocks for Moomoo with at least a $100 deposit. That's also down below. And for a limited time, your uninvested cash will earn 8.1% APY, which, guys, that's a no-brainer. So get on it. Use that link. Get your money. And with that being said, cheers. I'll catch you guys in the next video.